All right, ladies and gentlemen, I hope you had a wonderful day. I got another watch list for you, and some people are going to be happy about this. Some people will be sad, but it's looking like for a short amount of time, the stock market crash has been canceled. It was wild. Jerome Powell, he abandoned the Bears today, bro. This was Powell today, bro. I'm telling you, he went from beat you with the stick, you thought you were going to get real, hardcore Powell. Nah, man, that did not happen today. It was this. This is what you got. It was absolutely unreal. Probably one of the most dovish press conferences that we have actually gotten in a year. These levels now, we've broken out. We've gone past the Jackson Hole pricing. So if you want to pull this chart out, remember, that was Jackson Hole right here. You are now above that, and I'm telling you, everybody is starting to feel really, really good. Now, I have a breakdown for you. I'm going to go over exactly what happened and why this happened and what made Powell so dovish, but there is a couple of events that can change things. But when it's all said and done now, we're going to be waiting all the way until March, but you do have some data sets, and one of them is going to be on Friday. So, Chad, we have a lot to go over. Oh, you even had Facebook earnings, too. They announced a $40 billion buyback. So we have a lot to talk about. You got big earnings on the way. Apple, Amazon, Google, those are all tomorrow, and that could move the markets as well, too. But it's going to be a very interesting week moving forward. The Bears are feeling a little bit depressed right now, and the Bulls, well, they've already been exuberant. So I'm telling you, the rift right now in the market, it is starting to get real. So I hope you're ready. But Chad, I got the plays, I got everything, and we really need to talk about this. So run it, baby.
Walking to the couch, it's a 2020 election. Live in the hills, but I still get a spread. Started with a live, but I still reinvest it. Feel how I feel, then you feel like a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down.
But right off the bat, let's talk about what really happened here today. So the release came out, and we were looking for a change in the language. People were hoping, or at least the Bulls were hoping, that Powell was going to change the wording to say that there would be no more ongoing increases. That was the first part of the day, and it didn't happen, and everyone was like, okay, it has a hawkish tilt, and then the press conference started, and this is where things got really, really weird. I'll even tell you a little bit before that, this is what the Bulls were reading into. Right here, there was one change on the meeting. Instead of the determining the pace of future increases, they changed it to extent. And this is where the Bulls started reading into it, and they were like, okay, maybe that's bullish. Maybe that's showing that Powell is going to pivot and do all of this, but it got unreal because as Powell was answering the questions, he literally shrugged off anything that was hawkish. Anybody asking him about financial conditions, he acted like he didn't worry. He said, we don't really care about the short term. It's all about the long term. And then the market kept going up. He was even saying that the soft landing is his base case now. He was saying his base case is that unemployment does not go up and inflation comes down, and he was saying he welcomes all of this. They were throwing out all these hawkish questions. He did stick to the script of saying everything. He said, we're going to keep rates higher for longer, all of that stuff, but it just was not the same bearish Powell. So I have a theory, and we're going to go over it, but that's what led to the rally here. And honestly, I think we should just start with it because I really want people to understand this. My interpretation of this whole base case thing, he did not fight against the bond market. They asked him about the Fed futures and what everybody thinks, and he was just saying the most dovish things ever. I'm telling you, I was truly surprised by it, but the way I see it is that Powell would rather let financial conditions ease than tilt his hand and tell the markets when he will be pausing rates. If you guys remember, we went over some of the breakdowns of what happens when they actually start pausing. This is why Powell doesn't want the market to know when he is going to stop. Again, this is all my theory here, but it's simple. On average, since the last 30 or 40 years or so, The average time to cut after pausing is 20 days. The median is 90. So if Powell let us know when that was going to happen and he made it clear through the statement and even was just saying, we plan on stopping, and he really gave you that answer, I think it would have led the market to rallying way, way more, and everybody would have front ran it, and then it would take away some of his potential options unless anything happens, or at least maybe he might think something else is going to happen. But there's a couple of things. If you've also been watching this week, remember this is the net shorts on those futures on the bonds. Bro, everybody here is going to be pissed off because he didn't fight back against the bond market. That's why a lot of people were shorting it. If anything, I thought the bonds were going to get killed, and then we would have kind of balanced out. It would have eased up on the rally, but the way he answered it, even the Fed futures today, everything calmed down. Again, here are the Fed futures now. They started pricing in even more cuts than they have before, and this was just off of the fact that he was saying, I don't really have a problem with the financial conditions. I mean, it was absolutely amazing. So I think that's a good place to start. Those are my theories there, but that's why we led to the rally. So now let's just get into it. I'm going to tell you what I think is going to happen moving forward. Some people may like this, some people won't, but I really think it is going to be bullish until bad earnings or surprise data. That means this could last a couple of days or it could last a couple of weeks. We do have big data sets tomorrow and on Friday, but especially Friday. And one thing to note, after a lot of big run-ups in the Fed, usually the day after is very bad. But now, what's the difference about today? Well, Meta earnings, they are up 22% right now. So that helped out a little bit. And then now here is the schedule for tomorrow. You're going to get initial jobless claims. And if you notice what I put there on the keys, you need surprise data. This morning, the job openings came in very, very high, and that was very surprising, and there was a reaction for the first half of the day. So if you get a big number and it surprises based on what the analysts and the expectations were, they've been on target for the last month. That's why we kind of really haven't had a shock. But if you get a surprise, we'll go down. So watch for the jobless claims tomorrow. Same thing with the unit labor costs, because again, Powell is saying he doesn't expect the jobs to go up too much, and he said as long as the prices stay low, that is that Goldilocks scenario we talked about yesterday. He was liking it. So watch for any surprises, but then Friday, for real, as far as the rally is concerned, this is going to be our real test because non-farms is big. Depending on how those come in, maybe we will see if we could get rid of this rally or not. So that's what I'm saying here. I think it's bullish until bad earnings or surprise data, and we have a couple of data sets ahead of us, but then there's going to be quite a gap. Just to keep in mind, your next Fed meeting, I believe, is going to be like second week of March. So that's at least 4 to 6 weeks from now. So keep that in mind too, alongside the minutes. He did say something about the minutes, but Powell was overall just soft, man. It was crazy. And even after that, some people are assuming maybe some other Fed speakers can bring down this rally, but I doubt anybody is going to listen to any other Fed members. If anything, some of them may just start sounding really bullish, but the way Powell didn't fight back against bonds, financial conditions, and kept this optionality, but really leaned dovish on the presser, I don't think anything is going to change this, and it's really going to be the data, earnings, and all of that. Maybe he knows. Maybe he knows. Who knows? But that's key number one. We already went over key two. And then finally, like I told you, the jobs data this week, that'll be the real confirmation. And then 2 weeks from now, you are going to get the CPI. So assuming Apple, Amazon, and Google are good, and then nothing surprises tomorrow, it's really going to kind of be rallying. And I think you could go as high as 430 on the SPY until we get the CPI. That could be a song. So watch out for that. But overall, it was a crazy day. I think we're going to have a lot here. But Chad, stay in the game regardless of which side you are on, because this is just going to highlight how important this year is, because we're probably going to see some fireworks. If this is how the year started, I mean, we'll see how the year ends, but there's still about, 11 more months? So I hope you're ready. But let us get into the plays. So right off the bat, I got a couple of plays, but I got to start with number one, man. Bonds. That's it. If Powell isn't going to fight back on the bonds, it is only data that could bring us down from here. Not only is there that huge net short on the bonds, but even go look at all the yield curves. They got even more inverted. What people are calling it is bear steepening, more or less. They're expecting it to kind of normalize towards the end of the year now, but this caught a lot of people on guard. So I think it's going to be a big one. I still have my bond play on the futures. I will be looking at either IEF or like TMF as a play tomorrow. I only want to buy the dips because, again, even today was a big move on the bonds. But the last time you had any sort of quote-unquote dovish Powell, IEF to 10-year, well, let's just say that one had a pretty large move. So I'll come back to it here and you'll see what I'm talking about. But in July, this was the last Powell. They inadvertently took him as bullish, and well, you got to go up. I think it was like 102 or 100 to like 106. So it's a pretty big move there, especially in bond land. That could mean a lot. And maybe I think the 10 years right below 3.5 or 3.4 now. That means it'll probably go down to 3.25. Maybe 3%, but I think the bonds are fair game right now. Just be careful as they do move a lot, and then they'll like gap up, sell off throughout the day, then run towards the end, or vice versa. They'll gap down, and then they'll run up throughout the end of the day, and they're kind of do their thing there. So keep that in mind. Definitely going to be watching that. That is play number one. Then play number two, we're already in it. These are my other side plays related to the ES and the NQ, but YCL, the yen. We still have a future on that, but also as part of today and just being so dovish and, again, kind of hinting that he's going to be stopping the rate soon, but not saying it, and then allowing all of this bullishness. I mean, the dollar got clapped, and the yen is going to be a really big winner, especially if we watch the dollar decline. Pretty much that is going to be the theme moving forward here. Yields lower, dollar lower, and that could spark a whole set of different plays there, but this might be the main theme until data or anything acted upon by an equal or opposite force. So that is play number two. And then finally, interest rate sensitive stocks. So you can apply this to the shit stocks. You could apply this to the risky ones, but I do want you to think quality, but it's very simple now. Like I'm saying, dollar down, interest rates down, lower interest rates are going to help tech stocks that are beaten down. That's why today the Dow Jones only closed up 0.02. It recovered 1%, but the NASDAQ is up 2%. The S&P is up 1%. Dow Jones in value, it'll hold its own thing there, but the real money and the real wave that's being caused right now is if people are expecting this, pricing this in for the future, they are going for the stocks that will benefit off of low interest rates. So the ones that are beaten down, especially tech stocks, those will benefit the most. But like I'm saying, you could apply this all across the board. You don't necessarily have to go for the worst stocks you could find, but I mean, it's up to you, but control it, control the balance, and be wise, my friend. But those are the main plays as far as everything else. Now, I'm going to take you into what I did. It wasn't the best day, wasn't the worst day, believe it or not. My biggest loss ended up being Meta. I took that one out there, but overall, I was balanced pretty well. I'm still in the NQ, so that one wasn't pretty, but like I said, we have different working things for us. And then what I did, I was trying to clear up things in the morning. I should have held some of them. It would have actually benefited me a lot more, but I'm still okay with what I'm holding there. But I didn't want anything to turn against me on the opposite way and then be in a more uncomfortable position. But I closed out a Baidu in the morning, got like, I think $300, and went up another $300. We flipped Netflix off of news. There was news today that their ad tier is getting like double the amount of advertisers. That made it go up. I closed out the Broadcom for a slight loss, like $80. I would have ended up making a pretty nice bag on that one, but that was after everything. I wanted to close that one out. I got an $80 loss on that, and then I closed out Visa for like a $15 profit on the short. That one ended up good. We flipped FedEx there for like another $2 a share, about $50 or so. Closed out the Dolby. This was an old one, and again, I was just trying to get rid of some stuff so I could have wiggle room, and I didn't want to be constrained or let any of these plays that were kind of down there, work against me. So after things started popping, I closed out the Dolby. That one was another $80 loss. And then Whirlpool, I think like 80 to 100 on that one too. And then I added Apple there at the top. I grabbed 200 shares at 145.24. This is both pre-earnings run up. And again, everything was already getting really bullish. So I have 300 shares now. Remember, we had some old ones, but I'm doing pretty good on it now. So I think by tomorrow we could either flip that for a profit or play the earnings, but I'm going to be scared of them now because Meta, I lost $4,000 total from when we made this play. I guess it's been over a month now, maybe a month and a half since we did it. The risk to reward, I pushed it like I think $5 beyond where I wanted to. I thought the earnings were going to be bad, and guess what? Not only weren't they not as bad or as bad as feared, they announced a gigantic buyback, and everybody seems to be loving it. Even on the conference call, they focused a lot about cutting costs, and the market overall liked it. So I'm glad where I closed it because I could have lost a little bit more money, but shout out to that one for the long term. But I had to take a loss on the trading account, and now what I'm holding here is everything. So there's the yen and the bonds. They're doing very good. That ES is up 5,600, down $30,000 on the NQ. And like I was saying, if you add up both of these individually, it still hasn't been anything too crazy from what we've been holding there. So I'm riding it out, and I thought I would have made a move today, but I was surprised, and I think it makes more sense to just ride this one out here, try to push it till we get one of those surprises, and then hopefully we could dump it. Actually, I think futures right now are going crazy. Correct me if I'm wrong. You see the high ticker in the side there? I don't know if you see that. Yeah, they're already even NQES, so they're already getting ready. That's already 0.5%. So we're going to see how that plays out, but I still really like the bonds as well, too. They're doing their thing. There's the Apple play that we're still holding. It was positive for a little bit, then came down. Apple and or Amazon and Google worked. And then oil, this one's good. After today, pretty much, and this is why I think Powell did what he did, because if Powell told you when he was going to be stopping rates, commodities would have ripped, and then that would have went against their whole game plan with inflation, and that's why I think he didn't do it. But I'm a little bit more bullish there towards oil on middle of the year, oil and gas, or until we get closer to that rate hike there. So still in that, still got a bunch of other plays. I got a couple of shorts working against me like GE and Boeing, but then I have some upside like Procter & Gamble, LMT, UAL, AAL. Those are a little bit down now, but they could start to work for us. So as long as the ETH and NQ, and again, ETH, I was down actually more on a random day than today. Got to deal with those, but overall, the account, I think now after the meta, I think I'm down $5,000 now on the year comparatively, but considering the plays in the open and all of that, it could have been a lot worse. So we're going to see how it plays out, but I'm still excited for it. I'm going to be holding what I'm holding there, keep flipping some of these shares. And again, like I said, maybe some of those bonds and everything else, just pay attention to all this because you'll see how some of this balances out in the future. So I hope you're ready, but that is your watch list, ladies and gentlemen. Make sure hydrate, healthy, ready to go. Make sure post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. I need you to remember, baby, stay in the game is all about endurance. It may be hard, and remember, win or loss, we all in the same boat. It's just the beginning. Some things will last for a little bit. Some things only are very temporary, and some things will be the long term. But you're made for it. Don't let the emotions get the best of you. You don't have to go all in on everything, but Chad, this is just the beginning, and there's opportunities on both sides, and this is why you gotta respect it. But Chad, I love you. Get ready to close out the week. Get ready for the data. And Powell, why did you do us like that, man? Powell, he abandoned the Bears. I can't believe. I love. Okay. Or.